Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao. With me is Latha Venkatesh from CNBC TV 18. And today on this commodities update, we're going to do something different. We'll take you down the mid street and talk about what's happening in the currency space. The first big headline that I would like you to address is Rupee at a 3-week high. We've seen a good rebound. What exactly has triggered that?
Well, actually, everything is going for the rupee at this point in time. Globally, it's not just that the dollar has weakened. The rupee per se has had advantages of FII flows becoming positive in the past 1 week. We don't know if it's a trend, but that itself is very helpful. Crude is lower. That's always sentiment positive for us. And that's why you're beginning to see the rupee move a distance away from 80. And usually when it persists for 3 or 4 days and moves this, to this extent, 1 rupee cheaper is the dollar, then exporters get this FOMO feeling. Oh, we didn't get to sell at 80.
Yeah.
We didn't get to sell at 79, 75. We didn't get to sell at 79. So, some of them come and book,
Okay.
sell. And those who want to buy, who were hurrying because, it's getting to 80, will it get more expensive? Will now be of the opinion that, okay, we can wait, it's not running away.
Seems to be
so
easing.
all factors, and there is a risk-on rally. All risk assets, emerging market equities in general, cryptocurrencies, all risk assets are doing well. So EM currency like rupee will also do well. All that is working in favor of the rupee.
So you also mentioned that the dollar has weakened a bit. In fact, that's the next thing I wanted to touch upon. But does a weakening dollar automatically mean a strengthening rupee?
It's not 1:1.
Okay.
The dollar index, as you would know, is weighted more depending on the strength of the euro. It is dollar versus euro, yen, pound, Swiss franc, and a few other currencies. 80% or 85% is these big currencies. And they have had their own problems. So Europe is in a very weak state. The dollar had risen because Europe ECB was not raising rates, but the Fed was consistently raising. Now that changed when the ECB rate hike was more than expected, and then you saw the GDP number in US coming down. So the feeling in the financial market was, possibly the Fed will not hike as much as the markets had originally factored in. Maybe they will go on hiking, but not up to 3.5 or 3.75. Maybe they will stop at 3.25. Now, all those discussions or waves are happening in the market, and therefore you saw the dollar peak off.
Okay.
But there is a substantial number of people who believe that this is not a given.
Okay.
That going forward, Europe, because of the gas rationing, can actually not have the scope to hike because it will go into recession first.
Okay.
And therefore, the interest rate differential between US and Europe will increase, strengthening the dollar. So this journey to 105 or 104 may happen. But a revisit of 110 on the dollar index cannot be ruled out.
So we've not. Are you saying that the dollar has not peaked, perhaps?
Perhaps not.
Could we see worse?
Yeah, we could see the dollar strengthening further is a very big view in the market.
Okay.
That this is a technical reaction to a highly overbought position. And after it corrects itself, another bout of dollar strength is something very many people are betting on. So that will also have an impact on the rupee. But let me once again reiterate, the dollar strength is one of the factors which weakened the rupee, not the only.
But now, with the momentum back in the emerging markets, there's a lot of chatter that, FIIs are coming back again, dollar is easing, everything seems very hunky-dory, as of now at least. So by when do you think we can see a meaningful trend panning out? I'm sorry.
No, see, I take your point. At the moment, it does look like the worst is over. Both for stock markets, you feel the bottom is in place. You feel for the rupee, the bottom is in place. And you could say that of the risk assets everywhere. It does look like a bottom is in place. And then, you will have higher highs and lower, higher bottoms as well. There will be falls, but it will be, the bottom will not be as bad as the previous. Now, this could be the way the picture will pan out, that the FIIs have returned and the US will not go into a recession, but merely into a slowdown, which is well accepted or expected by the market. But a counter trend can also play that the US inflation, at least the last On Friday, we also got their wages data.
Yeah.
That indicates the wage price spiral can be really sharp, and which means the Fed can hike as much as was originally feared, or even more, and that can lead to a lot of problems for the Indian current account deficit as well, which is the separate part I feel we should be concentrating on. The dollar strength leading to a weaker rupee is one thing, but we have a current account deficit, and if crude does not weaken, then that deficit will not go away.
Yeah. It also got me thinking, the IT companies, they've been really taking it on the chin for some time now. Is it perhaps that, the European clients that they have, or the rest of the world clients that they have been paying them in euros?
Yes.
And while the US has kept strengthening all this while. So is that also a big overhang that has marred these stocks?
That has been in the price.
Okay.
I mean, it is well known. About 30% of, say, one company's earnings come from euro, and for someone else, it's a little less. But the bigger problem as a macro, as a rupee, what we should worry about is that we have a lot of imports which will, as the global inflation falls, a lot of our fertilizer imports will get cheaper, chemicals imports will get cheaper. So we will benefit. But our biggest import is crude, and that has not fallen, or at least there is a fear that it will not fall as much as the other commodities, because OPEC genuinely does not have extra space, extra capacity. So chances are it can remain firm for a long time. And our exports may fall because they are going to destinations like Europe, where there is a potential recession, or even China, where things are slowing down, or the US, where things are maybe not a recession, but it will slow down. So it is possible that imports may fall a bit, but exports may fall more. And exactly what you say, this difference is filled with capital flows. It's possible the capital flows will also take a different view if crude doesn't fall. India may not be a favored destination. So according to me, we are not out of the woods. At the moment, there is a lull. Whether this expands into a structural trend, a secular trend, the jury is still out.
So, what are you watching out for in terms of the macro data points, and for our viewers as well? What should they be monitoring right now going forward?
Crude is the biggest point for us. Even algo traders watch that. If crude is up, then India is not a favored destination. Other EMs will be. So we have to watch that first, and then we will have to watch also how the global growth story is panning out. If the growth story doesn't pan out, India is impacted. We don't realize that. We think we are a more domestically oriented economy. But there is an amazing amount of impact we will have if there is a recession. As you point out, software earnings can fall if there is a slowdown in US and a recession in Europe. Flows will not, other capital flows will not come. Then that can be these are the two big monitorables.
Okay.
Crude by way of inflation and global growth. A very important monitorable for us in terms of.
Okay, so looks like it's not really a time.